There is a Dutch company whose story reads like a cheat code for capitalism. It is roughly 4 centuries old. It once towered over rivals the way today's tech titans tower over startups, and at its height, its value dwarfed most kingdoms. People love to cite Apple, Microsoft, Amazon, or Saudi Aramco when they think about mega valuations. Combine them all, the legend goes, and you still wouldn't match this company's peak worth. That company is the VOC, the Dutch East India Company, a machine that married private capital to public power and rewired the global economy. Start in the Iberian Peninsula. In 1580, Spain swallowed Portugal in a personal union under the Habsburgs. Overnight, one monarch controlled 2 ocean-ranging empires with networks of ports, forts, and spice routes across Africa, Asia, and the Americas. For the Dutch, then rebelling against Spanish rule, this merger was an existential crisis. A single enemy now commanded both Spanish arsenals and Portuguese trade gates. Fighting cannon with cannon would not be enough. The Dutch needed a different weapon. They built one out of contracts and capital. In 1602, 7 competing Dutch trading ventures were fused into one chartered company, the Verenigde Oostindische Compagnie, mercifully shortened to VOC. Europeans called the region it targeted the East Indies, roughly today's Indonesia and Malaysia, with surrounding islands and coasts. On the surface, VOC was just another merchant enterprise sending ships to buy pepper and cinnamon. Beneath the deck, it was a hybrid, a corporation with war teeth. The States General granted it a charter that functioned like a license to act as a state. It could negotiate treaties, build forts, coin money in some outposts, field armies, and, when necessary, wage war. The most radical piece of the design was financial. For the first time, ordinary citizens could buy a slice of a globe-spanning enterprise and keep that stake as a permanent, freely transferable claim. Shares were subscribed in Amsterdam in 1602. The paper was stamped, signed, bought, sold, and inherited. A secondary market sprang up almost immediately, becoming the Amsterdam Stock Exchange. With permanent capital, VOC could scale in a way monarchies could not. No royal taxes, no one-off loans that had to be repaid before the next voyage, but a reservoir of cash that could be rolled from expedition to expedition. Merchants drafted blueprints and captains sailed the ships, but the political scaffolding that held the structure steady came from the House of Orange-Nassau. The Orangists did not directly run VOC, yet they aligned their future to it and backed it strategically and financially. In a republic where hereditary titles mattered less than credit lines, that alliance gave the dynasty leverage. Decades later, the connection grew tighter. Stadtholders' high officials, who served as quasi-executive heads of the Federal Republic, such as William V, took on ceremonial presidencies in both the VOC and its Atlantic sibling, the West India Company. The symbolism was clear. Commerce and high office moved in tandem. Make no mistake, the VOC moved like a sovereign. At various points it sailed with roughly 150 merchantmen, employed tens of thousands, and kept a private army measured in the tens of thousands. Its commanders negotiated with kings in Persia and sultans in Java. Its clerks priced nutmeg and tea like generals planning campaigns. The headquarters in Asia was Batavia modern Jakarta, seized in 1619 and rebuilt as a command hub. For 3 centuries, Batavia tied dozens of islands and ports into a single corporate strategy and stamped Dutch influence into Indonesian foodways, words, and architecture. All of this required people. From the early 1600s through the mid-1700s, around 1 million men signed on to Dutch ships bound for Asia. They were not settlers chasing mythic riches. They were employees of what we would now call a multinational, sailors and carpenters, clerks and translators, gunners and surgeons. They loaded pepper in Banda, counted textiles in Bengal, and drilled muskets on Java. A corporate payroll became the engine of an empire. The VOC's charter was only the first pillar. The second was Amsterdam's financial plumbing. The city's bourse, banks, and clearing houses gave the company predictable access to credit and reliable settlement. The third pillar was the strategic umbrella provided by the Orangists and the States General. Together, those pillars created an innovation that outlived the ships, the architecture of modern corporate finance, permanent shares, freely transferable ownership, a regular secondary market, sophisticated tools for hedging, arbitrage, and liquidity. Equally transformative was the legal shield of limited liability. In previous ventures, a ruined voyage could drag investors into personal bankruptcy. The Dutch structure ring-fenced risk. You could lose your shares, but not your home. That clarity drew in a broader investor public and helped normalize the idea that strangers could pool capital for projects far beyond any one person's reach. The line from that breakthrough runs straight into the corporate codes of the present. The Dutch financial model did not remain Dutch for long. In 1688, England slid into crisis as Parliament and large chunks of the population lost faith in the Catholic King James II. The solution arrived from the North Sea. William of Orange, married to James's daughter Mary, sailed in, deposed the king, and ushered in the Glorious Revolution. Under William and Mary, the English state adopted a Dutch-style synthesis of public finance and private markets. The Bank of England was founded. Long-term public debt was normalized. War could be financed by bonds bought by citizens rather than plunder alone. It was VOC-era thinking applied to government itself. They had already crossed the Atlantic. Dutch ships had reached the harbor of today's New York early in the century. The Dutch West India Company established New Amsterdam on the southern tip of Manhattan in 1624. The settlement was laid out less as a feudal keep and more as a commercial node. Contracts were honored, credit circulated, and diverse traders worked the docks. When the English absorbed the colony in 1664 and renamed it New York, they did not erase Dutch habits. Legal practices and financial routines fused into the new order and endured. Yet there is a darker register to the VOC story, and it belongs near the center, not as a hurried footnote. The company's rise depended on coercion and, at times, atrocity. On the Banda Islands, Dutch forces slaughtered thousands and depopulated the archipelago to lock down nutmeg. On Ambon in 1623, a trial and execution of English and Japanese traders, the Amboina case shocked rivals. In Batavia in 1740, massacres targeted Chinese residents. Forced labor regimes were imposed in spice districts. Local polities were bullied, fragmented, or replaced. The imperial dividend came with a human cost. Back on the balance sheet, the legend of valuation remains startling. In today's money, estimates for VOC's peak market capitalization often land in multi-trillion-dollar territory. Whatever conversion you accept, the point stands. The company's market power exceeded that of many nation-states. But scale can hide fragility. By the late 18th century, competition from Britain and France intensified, military overhead ballooned, governance grew sclerotic, and corruption spread through far-flung offices. The machinery that once looked unstoppable began to seize. Its methods, however, refused to sink. The Dutch talent for building institutions that make risk legible kept echoing. In the 20th century, Royal Dutch merged with Shell Transport and Trading to form Royal Dutch Shell, a petroleum giant that wore a royal prefix on the stock ticker. Dutch banking consolidated into modern groups like ING. And the Netherlands, no longer a maritime empire, became a financial power whose cross-border holdings and treaty networks punch far above the country's population. For a nation smaller than California, the footprint is astonishing. The House of Orange still sits at the apex of a constitutional monarchy. The crown is ceremonial, the connections are not. Through foundations, relationships, and long memory, the dynasty remains tied to sectors like energy, defense, and logistics, even as public life is now thoroughly democratic. If you want to see how legacy adapts, study how the Orangists learned to translate bloodline into balance sheet and back again. So, what ultimately did VOC and its allies invent? Not capitalism itself, that has deeper roots, but a scalable infrastructure for capitalist power. They engineered a corporate-state hybrid that could mobilize savings from bakers and brewers, pour the proceeds into ships and soldiers, and govern territories with ledgers as often as with lances. They showed that in a trading world, authority can flow through contracts as effectively as through coronations. They also revealed the moral hazard. When markets and armies fuse, profit can become policy. The modern map still bears the imprint. In Indonesia, the Dutch layer sits alongside older Javanese, Sundanese, and Malay strata. In London, parliamentary finance still leans on bonds and bills minted in the 1690s. In New York, a tangled downtown street grid whispers of New Amsterdam, while exchanges churn the kind of speculative instruments once tested on the Amsterdam Bourse. In boardrooms, the basic grammar of shares, limited liability, and listing rules remains VOC-shaped. Every quarterly dividend, every proxy vote, every takeover defense echoes those first stamped share certificates. It is tempting to romanticize the story as one long upward arrow from clever merchants to modern prosperity. Resist that. The arrow zigzags. Innovation in finance can widen opportunity and spread risk. It can also concentrate power and export harm. The Dutch were brilliant institutional engineers and ruthless monopolists. The House of Orange provided stability and learned to ride private capital. It also benefited from a system that dispossessed others. To see clearly, keep both truths in frame. Which brings us to the live question the VOC era leaves behind. If markets now wield the power once reserved for monarchs, who governs the markets? Who sets the rules for entities that move faster than legislatures and span jurisdictions like archipelagos? We have parliaments and courts for states, central banks for currencies, regulators for exchanges. But multinational capital often outruns them. The charter that armed VOC came from a republic that could yank it. Today's equivalents can be fuzzier. None of this diminishes the intellectual audacity of the Dutch experiment. A small republic, threatened by a superpower, built an economic engine that rewired the world. It used legal design and collective investment to turn trade into strategy. It exported that playbook to England and then to America, helping to seed the institutions that still coordinate modern finance. It also left scars that modern societies must name and repair. The story is both blueprint and caution. If you made it this far, you can picture the orange banner that once flew from Dutch ships and the spreadsheet cells that replaced it. Capital, the Orangists realized, could be more potent than crowns. 400 years later, we still live inside that insight. The seas have quieted, the markets hum. The question is not whether the legacy endures. It is whether we can govern it as wisely as we admire it. If this kind of history intrigues you, there is more to follow. And if the tale made you rethink how companies, states, and families braid together, drop an orange in the comments. The algorithm may be the only sovereign more capricious than any 17th century king. Zoom in on the mechanics of that first public offering. In August 1602, subscriptions opened in Amsterdam and later in other cities of the Dutch Republic. Rather than funding each voyage separately, investors paid into a permanent capital pool, directors known as the Heren Sixtentimen, or the 17 gentlemen allocated that pool across fleets, forts, factories, and garrisons. Returns were distributed as dividends when ships returned laden with pepper, cloves, nutmeg, cinnamon, silk, tea, and porcelain. The structure solved a core problem of early oceanic trade, the mismatch between huge upfront costs and slow, risky payoffs. Permanent pooled capital meant the company could keep fleets at sea continuously, without begging for a new loan each season. Speculation appeared almost instantly. Traders wrote forward contracts on VOC shares, borrowed stock to sell short, and assembled the first recognizable options. Joseph de la Vega's famous 1688 dialogue about the Amsterdam market describes brokers, rumors, squeezes, and bear raids that would feel familiar on today's Wall Street. For all the novelty, the core remained simple. Thousands of small stakes aggregated into industrial-scale power. Governance mattered because distance distorted information. Voyages to Batavia could take 8 months or more, one way. Directors needed standardized accounts, auditors, convoy schedules, and coded letters. Local governors like the Governor-General in Batavia could negotiate treaties, fix prices, wage war, and dispense justice. That was the sovereignty-like core of the charter. A private board could authorize acts traditionally reserved for crowns, provided those acts served the Republic's interests as defined by the States General and the company's own profit goals. Meanwhile, the House of Orange walked a narrow ridge. In a republic where city regions prized autonomy, the stadholder's authority waxed and waned. William IV and his son, William V, 18th century stadholders, became honorary presidents of the VOC and the West India Company, positions that symbolize the interlace of court and commerce. The dynasty did not own the companies outright. It sat at the junction where military protection, diplomatic cover, and capital flows met. In European geopolitics, the dynasty's neutrality and reach often mattered as much as forts. This fusion of public and private instruments helped the Dutch punch far above their demographic weight. The Republic's population was small, its farmland limited, its aristocracy thin, but its merchants mastered shipping insurance, exchange bills, and warehouse receipts. Its cities built canals that turned warehouses into just-in-time systems. And its investors, shielded by limited liability, could underwrite risky ventures without risking the family home. The VOC was the sharp edge that made those systems bite. Empires do not run on romance. They run on logistics. The East Indiamen that carried the company flag were heavy, capacious ships designed for ocean endurance and cargo volume. Convoys reduced the risk of piracy. At the other end of the voyage lay a network of fortified factories, trading posts with walls, stretching from the Persian Gulf to Japan. In places, the Dutch negotiated monopolies. In others, they blockaded rivals or toppled local intermediaries. The Banda Islands, whose nutmeg was once worth its weight in silver, became a laboratory for violent monopoly. The Dutch footprint in Indonesia left long cultural traces. Loanwords slipped into Bahasa Indonesia. Architecture borrowed gables and canals. Dishes and desserts blended spices with local staples. The relationship was hardly equal. It was shaped by extraction and hierarchy. But traces endure because centuries of administration and trade entangle people and habits, even when political ties snap. You can still see the ghost of Batavia in Jakarta's toponyms and town planning. The Atlantic story also matters. The sister company, the Dutch West India Company, operated in the Americas and West Africa, trading in sugar, timber, furs, and, grimly, enslaved people. Its seizure of New Amsterdam was part of a larger chessboard that connected Caribbean plantations, North American ports, and European refiners. When the English took New Amsterdam and rechristened it New York, the commercial wiring already installed proved too useful to remove. Stock jobbing, clearing, and credit negotiation took recognizable form. Against this sprawling backdrop, the numbers that people quote about VOC's market value can be argued over, but the hierarchy of scale is not. Converting 17th century guilders into present dollars is an exercise full of caveats. Prices, wages, and national incomes have changed orders of magnitude, yet even cautious conversions leave the same impression. At its zenith, the company's market power was on a nation-state scale. The more interesting lesson is not the exact figure, but the mechanism that made such scale possible: securitized imperialism, financed by joint stock equity. By the mid-18th century, the mechanism creaked, competition intensified, British privateers and Royal Navy squadrons harried Dutch shipping. The cost of garrisons rose. Some regional managers turned their offices into private fiefdoms and diverted profits. Political factionalism at home sapped focus. Attempts at reform arrived late. After French revolutionary armies upended the Dutch political order in the 1790s, the Batavian Republic moved to wind down the VOC. Its debts and assets passed to the state and were unwound over subsequent years. What endured was the operating system. When the 20th century's oil age dawned, Royal Dutch Shell carried forward the habit of blending public symbolism with private scale. The word royal mattered. It advertised reliability and national backing, even as the corporation expanded far beyond Dutch borders. Something similar happened in banking. ING Group, built through mergers in the late 20th century, grew into a continental lender that still reflects Dutch corporate law's attention to predictability. Measured by flows of foreign direct investment, the Netherlands today sits near the center of the world's capital graph. The country's treaty network, specialized service sector, and legal predictability attract holding companies and headquarters. Critics point to aggressive tax planning. Defenders point to efficiency and rule of law. Either way, the skills that once turned a marshy republic into a maritime power now route portfolios instead of fleets. The scale is astonishing for a nation smaller than California. Across this long arc, the House of Orange learned a durable lesson. Legitimacy is a portfolio. In one century, it looked like leading troops and issuing proclamations. In another, it looked like lending name and prestige to world-spanning corporates, attending trade missions, and anchoring a sense of continuity that investors quietly prize. The throne is constitutional, the network is practical. A fair telling also keeps the ledger of harm open. The VOC's tight monopolies distorted local economies. Its coercive labor systems extracted value with little consent. Its military interventions redrew maps without regard for the governed. Remembering these facts does not require canceling the past. It requires context. The same techniques that financed innovation enabled domination. The world we inherited includes both the institutions that spread opportunity and the inequities those institutions enshrined. Consider the market culture that grew up around all this. Amsterdam's exchange was both a building and a behavior. News moved by whisper and by gazette. Ship spotters scanned horizons. Printers sold price sheets. Coffee houses doubled as trading floors. Brokers invented margin lending and set daily settlement times. Notaries recorded share transfers so that ownership could be proven in court. Joint accounts let families diversify across voyages, warehouses, and mortgages. Pension funds for guilds bought slices of the company alongside mortgages and annuities, knitting corporate finance into daily life. Risk management was a craft. Merchants split cargoes across ships, staggered departures to avoid seasonal storms, and insured hulls with syndicates that spread exposure across dozens of underwriters. Captains sailed with sealed instructions that could be opened only after passing certain capes. Convoys assembled at Texel when war threatened. Corporate clerks reconciled inventories and standardized ledgers so that dividends reflected reality rather than rumor. That discipline made confidence a public good. It anchored a reputation that outlived any single voyage. There were bubbles, and panics too. The 1720 share mania that convulsed London and Paris splashed into Amsterdam's canals, and VOC paper gyrated with the rest. Yet, even through cycles, the notion that diffuse private savings could finance public scale never disappeared. It migrated first to England's funded debt, then to American canals and railroads, later to global supply chains, always riding the same trio of ideas: permanent capital, transferable claims, limited liability. Pull the camera back one last time. The Dutch did not invent human greed or maritime trade. They invented a reproducible template for turning both into statecraft. The VOC's charter signed by a republic, executed by a board, enforced by soldiers, audited by clerks, taught governments and investors that power could be modular. Swap spices for cotton, cotton for oil, oil for data, and the chassis still works. That is the uncomfortable brilliance of the model. It fits new cargoes without much retooling, which returns us to the present tense. We now live with multinational platforms that broker attention and logistics the way the VOC brokered spices and shipping. They span jurisdictions, write their own quasi-constitutions in terms of service, and maintain private security. The questions that shadowed the VOC about accountability, about who grants the charter and who can revoke it, shadow our era as well. Markets can outpace parliaments. Code can outrun case law. The old Dutch answer was to embed market power inside public law and to keep charters reviewable rather than hereditary.